YouTube and Facebook right now. Let me go ahead and just share this live stream real quick so other people could see. I'll make this public. Let me see here. Is there a way to make this post public? Hold on, guys, bear with me. While I try to figure out privacy setting here. Looks like I can't. Anyways, let's go ahead and take a look at what's going on here with the NASDAQ 100 futures. So I know the institutions are away for vacation, but the all algorithms are probably still there, keeping price in check. But as you guys can see here, this I'm kind of cleaned the charts a little bit, so it looks a little bit easier to look at. So as you guys can see here, this area right here, this downsloping trend line, it would be minor resistance, but it's only been hit. You would consider this first hit, second, third, and then this other minor resistance right here, this huge red candle, hasn't been. We didn't really get above it yet, and plus there is another one here. This huge candle right here, we haven't gotten above that. We did pierce this level though. So who knows, maybe there's a possibility we'll push higher today. But this is starting to form a bigger head and shoulders, guys. So once this starts to roll over and then this neckline starts to trigger, we could be seeing another 8.93% move to the downside. So that's what you get. That's what we got from measuring the top of the head all the way to the neckline, and you just replicate that same distance below the trend line, and that's how you measure a measured move target for head and shoulders. But it only matters when the neckline here triggers, meaning if price goes below it and confirms. And this is also the fascinating thing is also coinciding with the top end or the previous all-time high. So right here, if you connect the line, it actually goes a little below that, the measure move target. In which case, if it does, just watch out below. This thing could go to the next target right here, potentially filling the gap fill right here at 20,000 to 255 in the coming weeks. All right, so now right now it's the Nasdaq is pulling back a little bit, as you guys can see on this one candle chart. If we look into the 4-hour chart, this is what we got. But it looks like it's been bull flagging here since I would say, since last Friday. So it actually got up here and then started to consolidate through Sunday, had another move up, consolidated, another move up, consolidated. So this is like third leg already. And if we look at the RSI, where RSI is, there's definitely a positive divergence. What we don't want to see is, let's say, as it was going up, RSI is going down. That is a negative divergence. So positive divergence is good near term, but on the daily chart, the RSI. So from here, this is the lowest. I mean, this is the lowest here. Got up, and yeah, it is definitely showing some positive divergence. All right, and then let's take a look at the ES chart. ES chart is also showing similar signals here. The reason why it seems like it's having a hard time getting up is because of this trend line here that goes back since May. So this trend line has kept the markets up here. As you guys can see, hit it once here, second time here, third time here, fourth time here, fifth time here, it broke. And then now it looks like it's starting to retrace. And this also could be forming a head and shoulder. So if this starts to roll over, then there is a possibility of another 6% move to the downside. That's just the measurement from the top of the head all the way down to the neckline over here. And so what it needs to do is get above 68.37 in coming days, potentially retesting previous all-time high at around 69.38. And if you could get through that, then there's really nothing much stopping this from going to 7,000 at that point. So maybe even a pierce of 7,000 before potentially coming back to this area of support. This would be support moving forward if we could get through it. All right, and then now let's go ahead and take a look at the Russell 2000. Russell 2000 is already starting to pull back. As you guys can see, this candle right here, we'll see how that plays out by the end of the day. But basically what's happened here, it broke this level, these two areas of support, basically the one that's kept the markets up since April and May. It broke those two areas of support and it tried to retest back. I mean, got very close. So now we could be seeing another rollover. Where this would go, I don't really know, but we could do a measure move target by measuring the top from the top to bottom. This might be sideways consolidation, and then we could just take that distance and move it right here. Potentially, I would probably say right here. So if it does come try to get back above 2505, that would be major technical resistance, in which case price should pull back there, and we are already starting to see that. And then now let's go ahead and take a look at the Dow Jones futures. Dow Jones futures also starting to pull back sharply. There's also potential head and shoulders formation. So the measure move target for that is about 5.86%, basically taking the top here to the neckline. That measurement is identical to the measure move target. And that's how you calculate a measure move for head and shoulders. So as you guys can see here, it broke two trend lines. Basically the one that goes back since April, and then May right here. It broke those two trend since I would say right here back in November 17th, and then we confirm, and now we're trying to get a retrace back to the May trend line. That's been hit numerous times, as you guys can see. Once here, twice, three. This would be kind of like a fourth hit. Got very close, and then this fifth, six, seven, 8 times it's hit that level, guys. So that made that level very weak, and then now it is acting as resistance because it's pulling back from that level. Now let's take a look at the VIX. The VIX is below this trend here. As you guys can see, it's below the trend. So there's a possibility this could go down to 1679. But as you guys can see, every time we hit that level, gotta bounce. We hit this level again, gotta bounce. So we even hit this area here, gotta bounce. But we are below it, so there's a possibility it could keep going lower to 16, in which case you would just go short the markets there. Because basically what the VIX is telling us is every time we hit this upsloping parallel channel here, we got a huge spike in fear. So greed is when it's down here all the way to 10, but it's also been upsloping since July of 2024. So now it seems like so when we got to 1417 back in August 25th, we got a huge spike in fear shortly after. We also hit it here when it at 1433, got a huge spike in fear. So basically when fear spikes, you want to be buying the dip. Yeah, anywhere, I would say anywhere around 25 is starting to get there, where everybody or most people are fearful buying in. So that's usually when you want to buy in. Look for the best stocks that are beaten down. Usually look for mid cap, high market cap stocks, or anywhere between $2 to $10 billion worth of company. If you don't know how to find the market cap, like for instance right here, click Nvidia. The market cap is down here where it says market capitalization. This is a 4.32. So these are the mega caps. They matter the most because when they're down like 1-2%, that usually moves the market negatively, or when they're up 1-2%, that usually moves the market positively. So the semiconductors have been in control of the market. So keep that in mind. Semiconductors, AI, tech. So the S&P, the indices, Nasdaq, they're heavily um, basically they hold these stocks heavily. So that's why when you see these guys go down a lot, the indices usually are down too. All right, and then let's go ahead and take a look. The U.S. 10-year yield. So the U.S. 10-year yield looks like it's starting to get a bounce from this level. We pierced that level. We even closed below that level, but then it is getting a bounce today. We gap higher today. We'll see if this were to do this in the coming days. If that's the case, a down move, sideways consolidation, whether it's down sloping or maybe even slightly upsloping sometimes, it usually resolves itself to the downside. But if you see a huge pop, then and then starts to consolidate like that, that would be a negation of this down move right here. So 4 days of down move. Now we're starting to get green. We will see where this goes. So at this point, um, I mean, if you're trying to play the U.S. 10-year yield, you could, let's say, if you think this is going to get a bounce, you could be short. I'm actually short US 20 right now. So this has inverse correlation with the US 10-year yield. So it also hit the upper end of this trend line right here. So if we zoom out, this trend line goes all the way back since August 22. We hit it once there, hit it twice here. This was the third hit right here. This is like the fourth hit. So there's a possibility this thing could break out. And if it does, then it could be going to $94 next. So that would be another 4% move to the upside, which is not bad for bonds. That's not bad at all. So this is a 20-year yield, and then it gives you 3.71% dividend. So let's say you have like $20,000, $50,000. You're earning 3.71%, I think, every quarter. So just for holding this, you are earning. So that's the nice thing about holding bonds. I mean, it's not as volatile. So you don't have to worry about um, price fluctuation too much. All right, so now let's take a look at DXY. The DXY is also getting a bounce from this level. This is the breakout level. As expected, it should get a bounce. To how high it could go though, I would say maybe to back to 100.40 in the coming days. I mean, that is where resistance currently is. So we could even draw a line like this just to kind of identify where the current resistance is at this time. And if we zoom out, this is what we got. So it's trading above the parallel channel. We may get a breakout here, maybe at some point next week. It's either gonna break out to the upside or maybe go back to the parallel channel. It's gonna have to make its mind up one way or another. That is usually what happens in a wedge pattern, but this is like upsloping wedge pattern here that's going on. So at some point it may actually break to the downside. So if it does, then 99.49 would be your first support, followed by these areas with consolidation right here. Also kind of lines up with this area here. So this was support, this was resistance. So that would be the next area to watch if it does break down. If it breaks out, then this thing could be headed to 101 really quickly. This is the midline of this parallel channel right here. So this bigger parallel channel right here that goes back since 2022. That was the high. This was the low in 2023. The high here in 2025, early 2025, and we've been in this down sloping parallel channel ever since. So that's why we have two parallel channels, actually three. The other one is the bigger one. The bigger one goes back since 2011 low, 2015 high, 2017 high, and we actually never touched the upper end of it again. And then we have the this one goes way back. So this one goes back since 1985 high, 1992 low, and we hit it again here actually in 2022. And then we're now also in this downsloping parallel channel, goes back since 2022. So that's how you play around with the parallel channels. It's awesome. You know, I recommend using the parallel channels for your trading and investing. Um, all right, and then now gold. Let's take a look at gold. Gold is kind of having this definitely pulling back from this level. I mean, because this is down move, sideways consolidation. Obviously, even this one right here, big. This is a bigger one, down move, and then all this could just be sideways consolidation. So if it breaks up above and confirm above this smaller parallel channel right here that's going on, this small down move and sideways consolidation. This is still bear flag, bearish consolidation. So not unless gold could break out above 42.54 in coming days, and also this other parallel channel right here, all the way up, I would say, to all the way above 4,300. That this thing could go to previous all-time high, and then I would just take all these parallel channels out of the way, and um, start with the first chart. But basically, all this right here, all these lines right here, these are so we have a few parallel channels. So this one that goes back since 2023. That's what kept this market up for gold. Also, this other parallel channel that goes back since 2022. So that makes it a multi-factor resistance. And then this one that goes back since 2011. So you guys can see 2011 top, 2018 bottom. We hit it again here, so that's three factors right there, three parallel channels, four factors. So this one that goes back since 1980, and then right here 2001, four trend line right there, and that's how we're that's how we got that huge topping tail from last month. So that a topping tail is a reversal signal, and bottoming tail is a bottoming signal. So you usually see bottoming tails at the bottom of the charts, like right here. You see that back in 2018 we had a monthly bottoming tail, and then what happened to the price? Went up, and then here at the highs of the chart we had a topping tail. Over here too, you see that we had a topping tail, and then what happened? That was like 7 months in a row of down, selling after we saw that price was in control for a while. Um, moving forward. And then when price was actually able to break above that was right here back in March 2024. So topping tail in 2022, 7 months of downtrend, and then we had to retest that a couple more times before breaking out. So sometimes we will see, instead of a topping tail signal or bottom tail signal, we will see something like this. So like a bearish engulfing candle. So pretty much engulfed the entire candle from last month right here, 2011. Um, so that's the thing with charts, guys. Patterns repeat, human emotions never change. So, that's why if you watch the VIX, then you have a gauge on human emotions or the market sentiment. Right now, market sentiment is going back into greed, meaning, yeah, you probably don't want to be buying when market's at sky high prices right now. It's even when it's already corrected, it's still obviously very expensive to buy in. Like, if you bought back in April after we had that correction, then yeah, you are in the money. You probably want to be taking some profits. So that's a smart thing to do. You buy low and sell high. The correction we had from beginning of the year till April was 18% for the Dow. For the Russell 2000, I think it was even more than that. It was a 30% correction. So if you bought some stocks, even though it was only a 30% correction, some stocks have gone up already 100%, 200%, 300%, 400%. I mean, depending on the market cap, smaller the market cap, the more riskier it is. But of course, the more reward you can get when the bull market starts. So yeah, this one right here, 26%, the NASDAQ. The S&P 500, it dropped like 21%. So now it's up. It went up like 44%. So like double. double the amount that double the amount compared to this, when it corrected 21% and then went up 44%. At some point when this corrects, it's probably at least going to retest previous all-time high. That is what the measure move target is telling us as well. And let's go ahead and take a look at the Magnificent Sevens before I end this live. Uh, so Apple here, it hasn't broken out, but it looks like it want to retest that area again. What you want to see as a bull is not just a retest or a pierce of that area, but actually a breakout with confirmation. So if we get above this today, 280, and then on Friday, because tomorrow's Thanksgiving, on Friday when the market's open, when this thing pushes up to maybe 284 or something, then that's confirmed. That's a confirmed breakout. So any retrace back to this area, 279, 280, at that point would be a buying opportunity. I would assume that it would probably just do this before going higher. This thing could go up all the way to 308 in the coming weeks if it does that. But other than that, if this thing start to violate this midline of the channel right here, this thing could go fill the gap all the way here at 252. So don't be surprised if it does do that in the coming weeks as well. So those are the only two possibilities we got. So it's either you break out or you come down. And also RSI is getting to overbought territory. If we look at the 1 week chart just to see where it's currently at, yeah, it's getting to the point where it's overbought. Amazon is so as you guys can see, I've cleaned up the charts here so you guys could kind of see where things are right now. So Amazon could actually fill the gap this week at 234, and then you have this area right here at 238. This is still all bearish consolidation, guys, because what it needs to do is get back above here to 257. We pierced that level right here, but then we got a huge sell-off afterwards that lasted for 3 weeks. So we're still not in the clear yet. So for all we know, after the 50% retrace, this also could be forming a head and shoulders. This is the left shoulder right here, the head. And if this starts to roll over from there and starts triggering this neckline, that will basically prove the thesis that this is a valid head and shoulders, which is a bearish pattern. So on Google, on the other hand, Google is up a little bit again, but this is also getting to the point where it's overbought and it's having a negative RSI. So I want to go over that quickly with you guys. A negative RSI, what is that? Like, so look at this. This price was lower here, but RSI was the highest there, and then connected here, price was definitely higher here, but RSI is lower. And then over here, where we currently are, RSI is still lower, but it's the highest ever been. So while price was climbing up, RSI is going down, indicating that institutions are probably dumping into this. Because if we take a look here, the highest RSI, so when it got up here, what happened? We got like a 7% correction. RSI was lower here, and then what happened? Got like another 7% correction. So what that tells us is, since this is the upper end of the channel, we could zoom out here and see what's going on. And this is the first time we've ever tagged the upper end of this channel, because we've tagged the low end of it like 3 times. But this is the the first hit of this upper end of the channel. And this is a breakout from this bigger parallel channel here that goes back since 2015. So what could happen here is actually maybe we will retest back to 275 before potentially moving higher in the charts. You just don't want it to go below 273, because if it does, then this opens the door for it to potentially retesting these previous pivots right here around 257, 258. And if that breaks, then you have some area of support at 237, and then you have a major gap right here. At some point, that might get filled, like what's happening at Oracle right now. Oracle is a good example on that. So Oracle had a huge gap right here, already filled it, that you guys could see. This was the gap. It filled it right here, um, around November 7th, and then we continued going lower from there. We're actually lower um, than the gap fill now. There's another gap right here, gap fill right here. We are below this parallel channel. There's a chance that Oracle could try to save itself by going back above it. But if this just consolidates sideways like that, then this is probably gonna fill that gap fill in no time, maybe sometime next week. But yeah, this is, I think, attempting to get back above the parallel channel as we speak. No, it's not yet up above the parallel channel, but yeah, parallel channel is what's kept the price in check, but then it's now below it. So, there's a possibility it could go back to this area right here. So this area of support that goes back since 2022, that would be major technical support if it goes down there. So that would also be a good buying opportunity for Oracle. I mean, Oracle is a big company. So, if you're focusing on buying something, buy something that's oversold. Like this is oversold right now. Instead of like chasing something that's already overbought. Oracle might have a shot of going higher here, because it's oversold, and it's a $561.69 billion company. So this is a pretty established company. It's technically a mega cap company. So anything that's higher than $10 billion company, it's no longer mid cap. It's either a high market cap or mega cap. But this is hundreds of billions of dollars worth of company. So it's worth 192.02 right now in the free market. But yeah, if this goes down here to 142 in the coming weeks, coming months, then that would be a great buy opportunity. But of course, you want to probably start dollar cost averaging in I would say every good pullbacks. So that's why we look at the charts to tell us where those great buying opportunities would be. Like over here, this used to be pivot top, and they broke out. So it makes sense that it's getting a bounce there because it used to be previous resistance and now it should be support because we're coming back in to it. And also the weekly chart's getting to the point where it might get oversold. But if you take a look how much this thing has gone down, this thing has gone down like 45% from peak to trough. So that's I think that's a pretty good discounted price for a stock this size. That's just my 2 cents right there. Okay, so now let's go ahead and take a look at Meta. I cleaned up the charts here for Meta too for you guys to see where it's currently trading. So we have this small parallel channel that's developing after that massive drop. So the week of October 27th had a 12% drop, and then 3 more weeks of selling followed. This is also getting to the point where it's oversold. So Meta is a huge company too. For a company that's in the trillions of dollars, dropping this much is a big deal. So it dropped like 27% already from peak to trough, and it's now getting a bounce. We are up 7% already. So this area right here should be a test. It's getting close. It is pulling back a little bit, but I'd wait patiently to get up to, I would say, starting at 642, a dollar cost average on the short, all the way to 647.86. If, let's say, by any chance it gets above 653, then I just simply stop out my trade. Or I can set my stop loss there and then wait for it to potentially go to maybe like 50% retrace. That would be a good area to start shorting it all the way up here. I would say if it gets up to in coming weeks, gets up to 731, this down sloping trend line, that would be a big test of that area too, because that's where it hit it here, got a pullback, hit it here, got a massive pullback. So if we hit that area again, it's probably going to pull back at some point, maybe to just to the midline of the channel right here. So 663, 665. So short at around 732 with stop loss at 743, and then go long at 665. So that would be my play if Meta platform starts to go higher from here too. So Microsoft is definitely retested previous all-time high from July 2024. We broke out here, and then that's where we currently are. We also have this parallel channel that's developing. Um, First area of resistance would be 492. This is definitely M double top, which is bearish. So for all we know, this is going to retest and pull back and start doing that, in which case you might have another leg down from there. But if this thing gets up to the upper end of the channel, for all we know, this is all just bullish consolidation, in which case at some point this is going to break out. And when it does, it's going to be a massive move to the upside. This thing could go all the way up to potentially 657 by between now and I would say June 28th of 2027. All right. Because this trend line right here, this one is a big parallel channel that goes back since .com. So we connected the .com top um, shortly after the financial crisis 0809. So that was the bottom there. And look at how this thing has gone up. This thing is just basically gone parabolic ever since. So, but of course we have our periods of oversold, overbought, then price corrects. But yeah, that's just the nature of the markets. You want to buy when RSI reading is all the way below 30 or around 30, and you want to be selling when price goes up to, I mean, when our relative strength index goes above 70. Simple as that. Right now we are nowhere near oversold territory. We are nowhere near overbought territory. So this is kind of like a no touch right now until we start seeing some key levels getting hit. So that's why I only really care about the markets if it moves. Uh, like if it moves a lot, especially if it moves a lot on a daily, on a weekly basis. Like if it's up 5-10% for a company this size, that's a big deal. But if it's like the lower the market cap, the higher the higher it has to move for me to even pay attention to it. And then Nvidia, let's go ahead and take a look at Nvidia. Nvidia is continuing to go lower here. It's been down for 4 weeks already, but RSI reading is still nowhere near oversold territory. But if you look at the daily chart, it's getting close to the oversold territory. There is a measured move target of about 15% from where it's currently trading. So if this thing just straight sideways like that, that's a after a down move in the sideways consolidation, that's a bear flag. So at some point we may actually retest previous all-time high from beginning of the year, so around 153. So that is a possibility. Otherwise, what you want to see is invalidation of this potential head and shoulders. Is if we could get back above this trend line here. And then what I'm noticing here is we have a down sloping trend line that's beginning to form. So if Nvidia could break out above this down sloping trend line, then we're just going to previous all-time high, maybe even making a new all-time high at that point. And that is my analysis for Nvidia. And then Tesla is still on breakdown watch. As you guys can see, I did clean up the charts a little bit here. So this upsloping trend line that's been hit once, twice, 3, 4, 5, and 6 right here. We broke down, retrace immediately, got rejected, retrace, got rejected. So this would be the third hit if we go up to 430 today. And if you still can't break above this and go to previous all-time high, this thing could have another leg down. So if we do a measured move for Tesla, so this is just what the chart's telling me, guys. I have nothing against these companies. I have nothing against any companies. It's just these are just probabilities. I'm not saying it will happen. Nothing's ever guaranteed. Nothing's set in stone in trading. So for all we know, this thing could pierce, maybe even break above. And at that point, if it confirms above this trend line that's been hit 6 times already, which makes it vulnerable for a breakdown, then for all we know, this is just going to go to a previous all-time high. So 472, I would short there too. And if it could break above that, there's another level of 511, in which case I will short there again. So that's just how trading works, guys. There shouldn't be no feelings attached to it. No feelings. You should just be a robot. That's basically how it works. So like over here, as you guys can see, the upper end of the channel, we got a huge correction after that. We got the lower end of the channel in 2023. That's when the market bottom. We got a huge bounce. And then right here, we hit the upper end of the channel. We had a huge correction. So who am I to say that if we don't hit, if let's say we hit this upper end of the channel again, who am I to say that's not going to do that again? That's just what the chart's telling us. So we got to go with that until proven otherwise. All right, and then the next one is did we go over silver? I'm not sure if we did, but silver right here. Silver is have some resistance right here. So you guys can see went below, retested, got a huge correction. We went above to all the way here. This is previous all-time high. Corrected, went below it, got a correction. Test almost retested it, got a correction. And then now we retesting again. We may get another pullback, maybe to as low as $50.10. In which case I would probably buy. Maybe you'll retest this again. But this is looking like a bear flag, guys. So down move is sideways consolidation inside these two big candles right here. That's not good. Usually, bear flag resolves itself by having another leg down. So if we do a measure, move, target, we could be seeing another 10% move to the downside once this thing breaks. So it would be retesting this other parallel channel right here. So the smaller parallel channel connects the high from October 17, connecting the lows here on October 28th. And then we hit it again here, double top, November 13. So if we break below this trend line here, this is looking like wedge pattern. We break below this wedge pattern, then it's probably gonna go here to around $46. It will break above this wedge pattern. We could be retesting previous all-time high again, maybe even a pierce of that. And in which case you could be going up to $59 in the coming weeks. All right, and then lastly, guys, let's take a look at U.S. oil real quick. U.S. oil is not really doing much here. Um, but yeah, I would go long down here. If it goes down to 56.95 or get close to it, maybe even as low as 57.27. And then I would go short here, 60. So a break above this cup and handle pattern could actually send price. Let me see here. Let me just take these guys. So if you measure the low to the top of the handle, you just put that within the handle, and then a breakout to about $63, maybe all the way to 66 is a possibility. Otherwise, a break below this level could send it about 4.78% to the downside. And then Bitcoin, as you guys can see here, I also cleaned up the charts for Bitcoin. Is starting to come down. So down move. So this was down move right here, and then now for the 6th day, it's still kind of stuck in this wedge pattern, upsloping wedge pattern. So on the 4-hour chart, it is already breaking lower. So that is not a good thing to see. If it's breaking this down move right here, we can do a measurement from the top to the bottom here, and then take that distance, and then this is what we get. Let me just remove the other one here. So we could be seeing another 13.47 move to the downside if Bitcoin starts rolling over from here. But you will have support at 80,850. Maybe just set your stop loss below this candle. I'd say 80,500. If it goes below 80,500, then yeah, we're going down to 77,250. All right, guys. So that is pretty much it. I hope you enjoyed my live. Don't forget to like this live stream if you're watching this on my Facebook or on YouTube. Don't forget to subscribe on my YouTube channel if you haven't done so already. I'm rarely on there, but I do try to be consistent on my TikTok page. That's where I usually do my recording. So follow me on TikTok for more regular updates. Other than that, you guys could also join my group on Facebook. That's where I share my analysis on a regular basis. So you guys don't have to miss out on future market updates. And you'll know the trend for sure if you're just keeping up with my updates versus blindlessly investing or trading. That's what I used to do in the beginning. It was like, oh yeah, I think this is gonna go up because social media saying this, or it's just how I feel or what I think. Without the chart backing it, it's kind of like, yeah, like I said, blindlessly investing or trading. You don't want to be dumb money, you want to be smart money, and that's how you make money. And I've experienced both ways. I've experienced losing a bit, I experienced winning a bit. So, I'm still learning to this day, and I'm just trying to share my experience and my knowledge with you guys, so you guys could also, you know, um, make some money. All right, guys, have a good rest of your Thanksgiving tomorrow, and have a good rest of your day and your week. I will see you guys next time. Feel free to share this with your family and friends. And don't forget to message or comment if you have any questions or concerns.